All right. Thank you all for joining us. It's been a while since we've done one of these, and we opened up so that we can have a lot more people join. So I'm glad that you're able to connect today. We've got a lot of things to cover. So as always, hold your calls usually till the end. It works a little better. We'll open it up to questions. You'll be welcome to chat, or we can unmute and you can ask your questions directly. But I'm going to be quiet and go ahead and turn it over to Dave.
All right. Has everything, you can hear me okay now? Well, you would have come running.
Very good,
you
Dave.
would come busting in here if that was a problem. So
no, you're absolutely perfect. I can hear you just
okay, perfect. Hey, thanks everybody for taking the time to join us. And we're going to cover a couple of main topics here today. But we have been wanting to talk about the market and, if you will, an outlook. Without diving in, I'm not here to tell you what the market's going to do next week or why it's perfectly good and how things are just going to be wonderful, or our prediction is that interest rates are going to do X and Y. We don't do a lot of predicting, that, and we're not going to start doing that here. What I do want to say is, as we think about the market and what's going on, whether we're saying, oh, we want to do something like let's add a little bit of small cap stock to our portfolios, that's really because of the conditions we're in, not because we think it's going to take off tomorrow. We think that relatively it provides bargains, and that's the same way we look at whether we're adding bonds, cash, or what have you to the market or to your portfolios. And I want to start with this before we get into more details. I had this discussion earlier today, actually, with somebody, and you've heard me talk about it on Saturdays often. But I think it's important for us to say this again and to think about it, because it's very easy for us as humans to look at our portfolios and go, why do I own that? And why don't I have more of that? And why is everybody talking about NVIDIA and I don't have it? Well, two things. If you're in an income portfolio, low volatility, you want income, you're worried about security. In other words, we want cost of living adjusted income all the days of our life that we can't outlive. That does not look like NVIDIA. It does look like some growth, which you will find probably some NVIDIA in a little ETF, exchange traded fund, mutual fund you own, something like that is going to have a little piece of it. Something that covers the whole market certainly does. So it's not that you don't own those, but what normally also means is our eyes go to what isn't working. And I like to remind myself as well that it literally takes decades for portfolios to evolve into magic things. And what I mean by magic things, how does this portfolio have so much Apple in it? Google, Amazon, at fractions of what it's worth today. How? How did that happen? It doesn't happen over short periods of time. It happens with long periods of time. And most importantly, as Warren Buffett puts it, he over a 70-year period, he only had 10 investment decisions that accounted for most, if not all, of the returns. Now, that's a really stunning thing. He says all the others were mediocre at best. Now, that is really an amazing thing. The greatest investor of all time has a whole bunch of garbage in the portfolio, leading to, over the years, 10 beautiful things that have made up substantially all of the gains of the greatest investor of our lifetime. Meaning most of the things we look at in our portfolio really aren't that good. It takes time to evolve into that position. So when we think about that with our portfolios, that's why we don't rush around with our hair on fire. But I think from time to time we have to say ground conditions are changed. They definitely are. And also to acknowledge this basic truth. I don't care which side of the political aisle you are on. It's an uncomfortable state of being. The world is on fire. I know it. We all know it. We can't stop talking about what's going on in Israel, what's going on the college campuses, in the cities. That's a lot of social unrest globally, a lot of dangerous things. We've got a very unusual circumstance going on with our presidential election right now. It really was not like a hard-fought campaign or political campaign by one of the parties. It's a different ball game out there. It feels different. We do have inflation. We have a slowing job market. It's all of these things, and yet we turn around, we go, what is going on? We have markets at all-time highs. That's interesting. Do we run for the hills? Should I be worried? And the answer is, I don't know. I don't know what the answer is going to be or the correct answer. But for us, for the way we think about things, we make changes not as an all or none. It's not sunshine all day long and every day is perfect sunshine. And every day isn't terrible. But we have to stop and think about what should we be thinking about with a portfolio. And all of them are different. So to not acknowledge that we have a lot of problems is, in my mind, whistling past the graveyard. But it doesn't mean that the market's going to tip over and ever reward people that go to all cash. Because you could have made the same argument 18 months ago, also known as 40% ago in the market. And those gains are gone. And having a 10% market correction doesn't make you right now. You're still wrong. What we have to do is think about this in the long term. If we are owning great corporations, Apple, Microsoft, or just the general market, which is lifted or tilted towards those giant corporations, we've done remarkably well for our entire life with periodic interruptions, including very scary times. All of that to say this: we obviously are being more cautious. We obviously are able, especially with income portfolios or growth of income portfolios, able to add bonds for the first time in 15 years. Now, we've been adding them for a year, but the point is that just recently could we do that because the conditions changed. We change with conditions, not predictions. That wasn't a statement 3 years ago that we made, 2 years ago, that we're not owning bonds because interest rates are going to the moon and we think the Federal Reserve is going to raise interest rates 5%. That's not a prediction. We just looked around and said, bonds are earning less than the inflation rate. That makes them a very, very, very bad investment. How about we own none? That's not predictive. That's having an opinion of what will work or won't work in a particular environment, not prediction. Now that rates have moved higher, it's fine to add that. So yes, we're being a little more cautious because we are at record highs, because there are many things that can go wrong in this world. I would say many more than normal. And you're just going to see through this as we talk through that. And maybe, Jennifer, it's time to get to a couple slides that I want to share with people, because I know as we talk about it, the visual helps too. It really does, okay? So as we're looking at this, I like to make fun of Wall Street because they like to tell everybody what the price to earnings ratio is at 18.4 now for the last 20 years, 30 years. This is where we are on average. And as you can see with all the squiggles, there's maybe 10 trading days here that are anywhere near the average. It's always above and below, sometimes greatly above, sometimes greatly below. But we act like this is some kind of powerful force towards the average because human beings love to think linear. We love to be able to think we can measure this and get out our protractor and draw a perfect line. And then we're there with this amazing analysis of the future. And Wall Street really leans on this kind of stuff very heavily. And of course, that's why you're hearing a lot of bullish commentary or bearish commentary. And when you hear that, or you see a screenshot of something like this, you have to stop and wonder, what are they selling me? That they were really wrong yesterday, and now that the market's down 5%, they want to jump on the bearish bandwagon and pretend they were always there? Or vice versa. When we simply make statements like stocks are overvalued, what benefit has that been over the last 10 years other than to make you go hide your money in a mattress at 0 interest rate and miss out on amazing returns? Because it often spends a lot of time over its quotes average price to earnings ratio. Markets have reasons why. And one of the reasons why, if we can go to the next slide, is this. Corporate earnings measured by the S&P 500 are at all-time highs. So you ask a simple question like, why is the market at all-time highs with all of this going wrong? Because we own stocks because of a stream of earnings, right? That's the main reason, and I get we get in fearful times. I've kind of started off more on the negative side. We are in an environment where we are watching companies, just this last quarter, earnings go up 10% year over year. That's remarkably high. And some companies, which are so overpriced, but I ask that, are they? The Mag 7, right? Whatever fancy pants name we want to put on there to be a really cool person on CNBC. Okay? Whatever name you want to put on, the NVIDIAs, the Apples, the Googles, the Amazons, they're amazing companies, and they're growing faster than all these other companies by amazing amounts. We can buy really garbage companies like Ford or Government Motors. We could buy them, and you could have bought them 30 years ago, and you're still losing money. These companies are terrible, but they're cheap. I don't want to own them. I don't want to own those old industrial companies that cannot figure out technology, cannot make it work, or are in such highly competitive businesses, or high labor cost, high cost of capital, meaning how much they have to go, but build out their factories, all of these things. I want the digital world. And they deserve higher earnings if they're growing faster. The great companies are at it for a reason. They are at high prices. It does make it more volatile. I'm not saying all things are good. I'd rather buy NVIDIA down 50%. But last time that happened was 2022. And they also told you on CNBC you cannot own the big tech stocks in a rising interest rate environment. They absolutely stated that as a statement of fact. Believe it or not, Facebook, Meta, was off 70% during that time. The best of them, Apple, was down 30. But you can't own them, down 30. Those are rare opportunities that we have in the midst of reasons why we shouldn't be doing things. In the midst of reasons why we should be scared right now. Totally get it. Totally get it. News is frustrating. Leadership is lacking. It's pretty scary out there in the Middle East and other places. It feels out of control. And the hardest thing to do is sit on your hands and continue to own the greatest corporations in the world. But I wanted to say, part of that process is to say, as dividends come in, some of the things that aren't working in the portfolio that we trim out, moving on, or flat out, the apple has gotten to be too big. We need to take some profits here. Moving those over to bonds, cash, etc. It's okay. And when I say cash, I don't mean cash. I'm going to make this statement for probably the 20th time this week and 50 times in the last month and on and on and on for months. Money markets are paying 5%. Money markets are paying 5%. So when we pay 5%, you don't want it sitting in cash. So your cash in your portfolios is money markets. It's daily interest exchange traded funds. That's what those things are because they earn 5 to 6%. And I'd rather have 5 to 6 on money that we need to have available or readily available than near zero. And that's what banks pay, savings accounts pay, and all that stuff. So that I just wanted to remind people when we're talking cash, it often doesn't look exactly like cash. Okay? All right, next slide, please, Jennifer. There we go. Thank you. All right. Back to our good news, bad news scenario. Okay. This also is one of the things that we are worried about. And I think we should be. Do you know between regulation and taxes, the government is now taking 50% of our output, meaning gross domestic product, 50%. Now, again, this isn't a political statement. Government doesn't do things well. They don't do things efficiently. They don't create things. They take money out of the productive private sector and it becomes less productive at best. And all of us agree and disagree on various things they spend money on, but nobody disagrees with the statement that government is not highly efficient. Okay? So they're not. But we have now reached a point with regulations and taxes, we're taking over 50%. That is a huge problem and getting worse, as you can see the blue line. It is. The regulations or amount of regulations are extraordinary. Now, I'll get to some of those later on, but it is really something when we see that, and that is a really big problem to the long-term growth trend of the United States. Not to mention, who's paying off the government, the balanced, or not balancing the budget and how much more debt we're going into. It is a problem. Next slide, please. I also think that people try to guess things. And I want you to understand, and let me back up a thought here before I go into this slide. Just back up a quick thought. I want to also say that even though our budget deficit is so high, the assets of the United States of America are too. It's not over. It's not good. I'm often asked questions all the time, whether it's radio, whether it's in person, for years. Where does this end? I don't know. I don't. You would have thought Japan was in trouble with their more than 100% GDP deficit and what it did, and they were in trouble. They went to a 30-year kind of a recession. Right? They couldn't digging holes, filling them, all kinds of government stimulus. They could not get the economy to grow. And they can't. They still can't. So it's really a huge problem for them. However, it's not like they tipped over and the yen is worthless. It's not. It's not at all. So I don't look at this and say, well, we're about to need to go and take your gold bars and try to flake off little pieces at Albertsons for a loaf of bread. I just don't, number one, that's not going to be happening. If we get to gold is the only thing, then hopefully you've got other stuff because there won't be Albertsons. The whole economy is gone. When does that kind of hyperinflation, all those, there isn't a number. So there's no way to really know, except we seem to be fine, and we seem to be fine for the foreseeable future. That is not saying we're doing the right things remotely, okay? That is not saying that at all. This is an immoral thing that we're doing, in my opinion, to our kids and our grandkids, is to say we're not going to make any changes today so that you're hosed in the future. It's immoral. But until we talk about it on a moral basis instead of a daily, yippee-ki-yay, I got another $1 trillion out for my constituents, whichever party that is, that's not changing. Until people say, that's enough. I'm not here to hose my grandkids. That has to happen before we make any real changes. And that's both parties. That's both parties. Okay, let's go back to some more positive things. Okay, Jennifer? I'm starting to bother myself. I don't like that. Okay, what we need to understand too is that people think that's okay, I'm going to come in, after the election, when things go, once the market pulls back, and that's what I need to do. That's the best move. And we all feel that way, right? I don't like to buy on up days. I want to buy when the market's down a little bit. Oh, I've been looking at this stock or that. Let's see. Oh, good, it's down. This is now's the time. You know what? It doesn't matter. As a matter of fact, compared to just any other day, not a down day, just any other day, on average, over the whole year, buying at the exact all-time high is the best strategy that there is. I know, it's counterintuitive. But once again, if the market goes to 10% over long periods of time from every period of time, does it really matter? It does to us, because this world we're in right now is this quick click. I need my fix quick. How's my portfolio doing? How's it doing? How's it doing tonight? Those of you who clicked on that day last week when Blue Leaf was down and it showed 0. Yep. Okay. Of course it isn't 0. There are errors that occur, and we all probably shouldn't be clicking every single day. I know it's hard not to do that and see what the market's doing in real time. We've got our cell phones. We can click up and bet on the next game. We can also bet on options on NVIDIA. Hey, I'm going to put 20 here and 20 there, and off you go. Lots of things there, but none of that is investing. None of that is investing. And the shorter term we look, the worse we do long term. And it just adds angst to our life. So again, that's a reminder, but it really doesn't matter, does it? All those numbers show that it works out fine. Okay, next slide, please, Jennifer. These are crazy. This is really crazy. I just want you to understand that Starlink is amazing, and anybody who's been in the backwoods and made a phone call from middle of nowhere understands how crystal clear, real time Starlink is. How high speed the connection is, it's amazing. But it's just kind of getting going. And remember, these are privately funded. This isn't the government. Actually, at all. It's not the government at all. Starlink now launches satellites for the government because government is inept. It'll be another 50 years before they could get to Mars. It'll be, who knows, but it'll be quicker than that because you got a bunch of rich people, private sector, figuring out how they can do it. Blowing up billions of dollars of rockets all the time as they go further and further towards their goals. So some crazy guy, Elon Musk, decides I'm going to spend billions of dollars and I am going to put satellites in orbit. That'll take a long time and we'll lose billions and billions and billions and billions of dollars. Keep raising money, keep launching rockets and putting up this network in the sky. In 2019 is really not all that long ago. Let's see where they are today. That's how many there are. How could you launch that many rockets? I think we'd still be in permitting if it was NASA. We'd be permitting outer space stuff. We would be permitting a launch or two. 5,300 satellites in orbit. Maybe we have to go to 15,000 to cover the entire planet perfectly. 4 years. 4 years. That's why I'm optimistic. This is one of the reasons why. This is just real time. CRISPR, a little company that figured out gene splicing and then open sourced it for all these different companies to share data, just cured a major disease, sickle cell anemia. They didn't cure it with take this pill and you'll be okay. Take this shot and it's okay. Nobody else in the future will get it. No. Splicing a gene, take the gene, fix it, you're done. Wow. How many more are there? Well, there's 20,000 of those. Now, I'm not a scientist, but if you can cure that one, oh yeah, that's right. They have 3 more they've already just done. Think of what's happening on that front. It's absolutely astounding. And I think about this last chart as just something that, to me, is amazing. I happen to be born in 1961 when over 60% of the world lived in extreme poverty. Isn't this kind of the measure of how we live really, I mean, kind of a pretty good one that just says, wow, people aren't starving to death. We kind of just like, we live so fast in this moment and we don't think about it. We worry about the markets. We worry about politics. We hate the other side. And look how human beings are doing, though. Certainly, it's not perfect. It's certainly there are awful things and there's evil in the world. There's so much evil. It's inconceivable what people like Putin and Iran do, and terrorists do. What they do to women. It's just yeah. Ugh. These are awful people, and they need to be dealt with. But overall, it just keeps getting better. So we worry about the markets. We worry that they're too high. We worry about that, and we should. But we don't want to over worry. Nothing is all or none. And then with the world in a better place than it's ever been, why wouldn't stocks be at all-time highs? And when we think about the rest of the world, where's capital going? Why would it go to Europe? It's pretty. It's the greatest outdoor museum there is, but they're productive in almost nothing. And I'm not saying there aren't a few companies over there. There are. But it's become this very dead zone. There are hardly any small companies. Entrepreneurs are few. And entrepreneurs with big ideas, like Facebook, like them or don't, it's a big idea. The Google kids, Steve Jobs and Apple, and then it just keeps rolling with more generations taking the ball and running with it. What Bezos did at Amazon is astounding. Europe doesn't do this because the government takes everything. This is America. We have 25% of the output in the world. 25. You want to venture a guess real quick in your own brain? How many people live here? What percentage of the world? It's a little less than 5. 5% of the world does everything. And I would argue they do all the art. They do all the music. And I don't mean all, but most. All the architecture, this is not all, most is here. And technology, most certainly, is mostly here. Not all. By the way, guess where the far and away the second biggest tech hub in the world is? It's Israel. You don't have to be big to have big ideas. But we do have to have government out of the way. We don't do it perfect. We don't. Our government is 50%, as I started off talking. That's frightening. Frightening. But we seem to have most of the world's best ideas. And that's why capital keeps coming here. That's why it stays here. And that's why I will continue to argue that the best corporations of the world are not overpriced. It doesn't mean they're not going to take huge bumps. But when companies like the Mag 7 or 10 or 25 great companies, whatever it is, are generating so much cash flow to come up with amazing ideas in the future and make more profits, I want to own that. And I don't sit around and argue about PE ratios being too high. So I understand this is a lot of turmoil. The world's upside down. It's strange. It's weird. I can't get my mind wrapped around a lot of things. But we're still the best by a lot. So as we let cash build up and we move to other places, especially for those income portfolios, yes, but this is not all or none. Don't be sitting on your cash waiting for something to happen. That's what we always think about. Let's go ahead and move slowly. Slow, and build portfolios over great periods of time. We're not here to panic. Even though I know there's a lot of people, a lot of words, a lot of stuff out there. I get pictures of it all the time. But you know what? Those same people have been talking for 40 years that I've been in the industry, from one thing to the next. We ain't done yet. And we are actually, as the last chart I showed, we're doing a lot better than we've ever done in all of history. All right, Jen, let's roll on, shall we? This is the next big thing, and then we'll take some questions both about the market, about what this is. I'm going to start this off, and Jen's going to take it from there for whatever she thinks we need to fill in the works. Many of you know this. We're doing our very best to let people know this has been going on. I want to give you a very brief look at what's been transpiring over the last, actually, several years. So we're trying to come up with some continuity program because we all know it someday I'm going to be taken out of here, probably a few years before Jennifer. But either way, we don't have any lease on life. We don't know. And so things can change, and we needed a continuity program. So we've been talking about it for a number of years. We have one, but it's not adequate. It was not adequate. And we knew it. And we just kept growing, and we're still growing. And so we kept growing, and we've reached a point where we had to kind of stop and say, okay, we need to take this to the next level. Number one, I've been mumbling about AI, artificial intelligence, supercomputing, and how great it's going to be for our industry, what tools it's going to have for our clients and portfolio management and everything else. I've been mumbling about it, but there's nothing really we can do about it. It's like, are we going to get a tech person? All of those things, okay, in here to bring those services to our clients. It's a big world of technology, and fintech is specific what we want. Fintech, AI, supercomputing, how is that going to help us better manage portfolios? We need full-time people on that. How do we do that? Well, we can build out another structure that's way up here. We can do all that, or we can find a partner. And it turns out that the greatest thing that we ran into was it seems like everybody wants to partner with us. Now, that's great, but what it really means for you is that we were able to get the terms we wanted. I don't mean financial. I mean, we aren't going anywhere. Okay, that's good. I think most of you who are here think that's good, right? We're not going anywhere. Number one. Number two, we get the kind of technology we need to better take care of you. That's like super critically important. We got to grow. And that infrastructure is like, boom, we're plugging and going, right? Three, we get to manage the money because I've said it many times before, we're not going to do a 60-40 portfolio. That's institutional thinking, and that's what people do. I don't want to do that. We're not going to do that. So we're not going to do that. And we don't have to. Now, most of the people that we looked at would require that. They would also say we're going to have to raise the fees because you don't charge enough. All of the fees are going to stay the same. So for our clients, this is absolutely, I sincerely mean this. I know I'm supposed to say this, but for our clients, it's absolutely true. We can't find any downside to this at all. We literally can't. And you know me well enough, I hope, and Jennifer as well, that we would not be hiding stuff from you. That's not us. Hey, if this is really an ugly thing, here it is. Look at the ugly thing, okay? We're going to show you, then we'll deal with it, we're going to move on. But the point is that this is going to give us also, we're going to get more time back because we're not going to be, I don't have to do the trading now. I get to make investment decisions, but I don't have to do the trading. Jennifer doesn't have to do compliance, and JC doesn't have to do compliance. So we're going to have more people spending time with what we like to do. So therefore, I think we're going to stick around even longer because we're doing what we like to do. Let's solve problems with you. That's what our job is. That's what we like to do. So this is going to free us to do that. I'm still going to hold back that there's 5 or 10% that I won't like. Okay? Because we've kind of called our own shots since I haven't had a boss since I was 18 years old. So I'm just holding back. There might be something out there I don't like. Okay? But we are so excited about this and so excited for our clients. But with that, Jen, what am I missing? Is there something there that we need to add on?
There's a very little. We feel very strongly that if we're making a move like this, you should acknowledge it. So there will be a form to sign. We're trying to keep it as simple as possible. It will restate your fees. The only thing I would add to that, when we say all fees will stay the same, we do have some clients on some accounts that haven't paid fees of any kind. We do need to layer on a small fee, but we'll explain that to you. You'll know exactly what that is because They won't allow us not to charge. So that's one thing that's going to change. However, overall,
Yeah, sorry, mom and dad.
yeah, exactly. Pretty much that's it. So overall, though, when Dave's saying really nothing is going to change, we found someone that really wants to partner with us. So they don't want to employ us, even though technically we will be now reporting to another office that will handle the compliance and all the forms that come with us. They don't want us to not think. They don't want us not to make decisions. One of the things I think Dave's looking forward to is they do have a team of research people that if he says, you know what, I want an energy something, they go look for it and can give him some ideas. So it helps on that. It's going to make him a better researcher, I feel. There's just so much that we can do as we get a little bigger, more outsourcing that we can do better. And we like to say this, we've kind of gotten to the point that we work in our business so much because of just running a business, right? Fees, and on top of that, we also have to do all the record keeping, HR, compliance, everything that comes with operating it, they'll take away. So all we have to worry about is doing our best work for you. So look for that. You'll see a DocuSign coming, of course, and it'll be very easy. We're hoping we can just put like a code word on there, which will be your last name and your phone number or something like that, that you can just log in and not have to answer what was my truck in 1995. You won't have to do those questions to identify because there won't be anything confidential on the forms. We're going to make sure it's very basic information, but it'll be very straightforward as well.
Yeah, it's like one signature or something. It's just basically, you know, that we're changing from Petso to modern, and we'll throw in there too. We'll be co-branding for the next year. Take care of some of the questions I know will be coming. We're going to co-brand with them for the next year at least. We'll see. We've been around here a long time and nobody knows modern. There's no reason to know modern. And I guess I'm going to put it this way too. This was a long process. We really hit it hard since February, right? I mean, it's a very deep, Jennifer's had to put, I don't know, I can't count them how many spreadsheets have had to go out, and we're looking at all these companies. It has been a big undertaking. It's not an easy thing to do. And, but we had reached a size where something needed to happen, because we can't be where we are here in this nice little space without losing your experience. And so that's really was a big driver for us. But we also, at the end, when we finally got down to the two best choices, which is, they're all so good. I mean, when you get to that point, there's 90 active buyers out there. You get that all the way down to the 5 that looked like a good cultural fit, to the 3 that we called finalists, to the 2, to the 1. They're so close. And it's not, the finances are insignificant difference between them. It's who you feel is going to give us the best experience. And in the end, both Jennifer and I had the same exact one that we both chose. I had them earlier on the list, but they were much smaller. And so we thought that this is going to be a lot of fun to be with a smaller group where we have a big presence with them. We are very important to them, or a big group where we're not. And we just, in the end, we thought that we're not done here. We want to grow with them. And that's the great thing that we feel about this. So, Jen, if you don't have anything else, we should probably try to answer a couple questions. Huh?
Yeah, we do have some really good questions coming in, and we appreciate that.
Good.
So first, we'll go ahead and how much control over that control not changing do you have? I would say 100%. They've been very open about it.
Yeah. If you're talking about on a legal basis, they own it. Sorry, they can do that. But why they did not come here to change us. Trust me. This is a process. They came in because they want to help us grow. They are not coming here to destroy us in any way or to shake away our clients. They bought this business because they loved this business. And I don't mean that by hurting my arm, but you can't imagine how explicit they were at how good a business this is and how much they want it. And they were certainly not the only ones that just out loud said, this is what we want. And they're not coming in here to manage it. Jennifer and I are going to continue to be the managers. What they're going to do is add structure, back office, and we also do need more personnel. We're getting it. They've already started recruiting. So
So the next question, which very good. Anyone leaving Petso? Schwab still the platform? Are we changing any investment offerings or types and fiduciary? So
Go with it. Tell them.
absolutely. No one is leaving Petso. They bought the team. They want the team. They don't want us to leave. It's important that everything stays the same. Schwab will remain. You're still on that platform. Your account numbers will be the same. Everything will remain exactly as is. That was one of our non-negotiables that had to stay, and they agreed. Offerings and investments, I think will get better because we're going to have more research and more people to add in different opinions. I mean, Dave is excellent at this, but he would, I think, welcome the idea of having someone to bounce ideas off of that's a CFA. So, and we're all fiduciaries. I think this industry is just that way.
Yeah, I think that brings up, I don't want to get too far in the weeds on this because we need really a whole discussion sometime about what really a fiduciary is in more of a deeper dive, meaning what people don't understand about this is now we're getting some more size, which means now maybe some of the deals we're doing won't be $5 million, they'll be 10. Well, guess what that means? Goldman Sachs, JP Morgan, Morgan Stanley give you a little bit better terms. They'd like to have a little bit more. And what I think people don't fully understand too as a fiduciary, what we do is we are not doing the deals. We go and put it out for bid for what we like, and they compete for it. And then you may only have 20,000 or 30,000 of that deal. So the point of us getting bigger is that now maybe the deals can get bigger, to Jennifer's point, that we're also going to have some more, if you will, cost savings. It may be expressed in a better return. There's a number of things that happen. And I'm going to quickly say already we have had $79,000 worth of change because of this merger for our clients. That's all drops to them. It might be $14 in this account on average or whatever, but it is $79,000 that was recognized because we joined them.
Yeah, of savings to the client and through expenses.
Savings to our client base. Yeah.
All right, I'm going to go ahead and unmute Mike here.
Okay. That's always dangerous with Mike.
I know. Go ahead, Mike.
I got an easy question for you. Hi, Dave and Jennifer. I'm pretty excited about this partnership now that you explained it. I wasn't worried at all when I first heard about it, but I'm sure other people have some questions. But my question has to do with inflation over the last couple of years. Does that play a part in record earnings that we've seen and the stock market gains that's going on?
Yeah, it does. You're right. That's a very good point. And some of the things you would analyze, like a grocery store, requires that kind of analysis. Are they really doing well, or does everybody spend 20% more, which we all know the number is a little bit more than that, but around 20% more over the past 3 years? Do they spend that only because of inflation? So in other words, that is important, and more important in some industries, right, than others. And so when it comes, though, to the tech companies, what they're doing is carving back inflation. It costs less per click, or however you want to phrase it, for data, all that stuff out there. We become more productive with technology, which again, I think is part of the reason why you see all of those companies that are making so much money at the higher end of the scale. So Mike, it's a really good point. And we weigh heavily on, if you will, those companies that are growing the most rapidly, not because of sales or one-time bumps that they get because their particular commodity of copper is up a ton during a building boom. It's a really valid point. Some is, but as you look at the chart back to the 1970s when we had super high earnings, also the cost of those companies go down the costs increase so much that their profits really don't just go up. Sales can, but if inputs also go up, it's a wash. And so the 1970s wasn't a good time for corporations, as we thought going into this higher inflation. It's not 70s like, higher inflation time. And you know what? For some companies, it's been terrible. It really is. Whether that's a real estate firm that has to hire more expensive people, and yet their people are leaving, and the rents aren't going up as much as the other inflation rates are. That's the kind of thing that you have to be careful of. It's not uniform across the board, Mike. Good question, though.
Okay, thank you.
Mm-hmm.
Perfect. So the name of the new company is Modern Wealth Management. Okay, that was one of the questions we have. FinTech is actually financial technology, just to answer that question real quick. New services, yeah, they actually do have a lot of services. They do have a tax arm, a legal arm. So if we need questions for estate planning, and all those are additional costs, of course, but there are a lot of services that they will offer that we have contacts to here locally, which we'll still refer out, but they do offer those services as well.
Can I chime in real quick on that, Jen?
Of course.
Because on the financial planning side of things, I think people need to be reminded too that it's going to be a much more robust, up to date, and this is not a cost item. It's just simply going to be the technology we're going to have that's going to be in more real time for planning purposes. And it's important to remind people we aren't just investing money. We're here to help people plan for their future. And that's not one time, that's ongoing. So I like to remind people as changes occur in their life, they sometimes forget to come back and let us know we've got some new data to input.
Yes. Yes.
And the new technology we're going to have is not with cost. It is going to be much more robust than we've had in the past. We're all very excited about that.
Extremely. Yes. Yep. The transition is beginning now. We don't have the forms ready to go, but we're hoping to have those probably next week for you to start signing, and then we'll get the DocuSigns going. We hope to get that done we're shooting towards end of October to be completely complete. All right. It is Modern Wealth Management, just to state again.
And also no reason for you to know them. We didn't either.
Yeah, exactly.
Okay. That's what's going on in our space. Nobody, no, I should say nobody. Very few are actually selling to the Wall Street firms or merging with them, however you want to phrase it. And this is not our exit plan. Okay. We're not, this is our staying alive plan.
Correct.
Okay. We like what we do. We just don't like the garbage, and they're going to take a lot of that off our plate.
The new financial planning will be available this year. We're going to do some really extreme training because we really want to understand the systems well. They're big financial planning software that's been around for a while that's just continuing to get better and better. So we're assuming we'll be able to use that this year. I don't know why we wouldn't. Hopefully by November or so, I would say at the latest. Because they're going to come here, spend a week training on everything and get us up and going on their systems. I'm guessing because we're very familiar with financial planning software, the learning curve is going to be pretty small for us. So we're hoping to be ready to do that really, really quickly.
Mm-hmm.
All right, Modern, you say Modern's a small company. How many people and how much money do they oversee?
By the end of the year, with us included, it should be 6 billion. We happen to be at about 1.4, a little over 1.4 billion, which is why it's a big deal to them. And therefore, we feel really good about the terms we got as well, and why we're excited to grow with them, because they are growing very, very rapidly. I think they have a little over 100 employees with all the offices now, don't
I
they,
think
Jen?
so. They may be pushing like 150, somewhere in there. Yeah.
I
They're
think so
around.
too. Yeah. Overall, yeah. Yeah. We run a lot leaner than they do.
Mm-hmm. Yep. And we are staying in this same location. 5-year lease they're signing. If we grow, Dave owns a whole building, so we might expand onto the other side, but we're clearly staying. That's the whole point to everything being where it is. But yeah, we're staying in this location unless for some reason we outgrow it, which I can't imagine for a while. Okay. And they are, let's see, they're headquartered in a couple places. They have a little bit of remote work. They have Kansas office. They have California, Minnesota of all places. And where else?
Texas.
Texas, yes, Texas.
And their main office is in Kansas, I think, and then they have some folks in California.
Yep. Yes, this is being recorded. And we will get it on our YouTube and we will send out a link. I think that's it. Any other? Oh, there's another question. Okay, hold on. Let's see. It says there recently, just in 2024 alone, there's been significant database and cybersecurity attacks. Apple, Meta, T-Mobile, just to name a few. What measures have this company taken to protect the customer base? Resources does Modern have to help protect the client?
Yeah. Jen, you can probably speak better to that,
Yeah.
but let me just add that your money is custodied at Schwab. That's the key.
Mhm.
That's where it is, and that's and also things like Blue Leaf and like you're going to be docu-signing. That's why you don't see personal data very often coming out, okay? Because that's much more easily hacked than Schwab.
Yeah. I think that's the number one concern and risk with every firm is how do you hide and can you client data safe? That's why we try very hard not to put it on many things. We don't share non-public information. There's a lot of ways to keep it secure, and they're seriously on that as well. They do dual authentication. I know it's a hassle. People don't like to get that code. I hear it all the time. Oh my goodness, I have to log in and wait for my verification code. However, think about the other side of that. It's really not a hassle if you get hacked. So use dual authentication anytime you can and make sure your information's up to date. If you change addresses, phone numbers, emails, your advisory firm should be one of the first places you let know. It's super important to keep everything up to date.
Yep.
Jennifer, just a quick comment.
Yes, absolutely.
Hi, this is Frank Saline. It's actually my wife, Lourdes, that has an account with you folks. We appreciate it. We've been very, very pleased with that. And I just want to tell you, I'm a business broker that deals in M&A with in the children's sports arts and education field globally. So we deal with a lot of investment groups and a lot of sales to in-house groups like yours. I just want to say congratulations because the market is consolidating like crazy. It is the wave, and you'd love to stay all independent and all that, but the things that can be taken off your shoulders, as you described, Jennifer, and are really important. So I want to congratulate you because it's a big deal. We know we deal with the sellers all the time and the emotions that they go through and protecting their customers and their staff and all that. We totally get it, but congratulations, both of you.
Thank you, Frank. I appreciate that very much. And you hit it right on the head too. Dave and I, once we decided to really do this, I think both of us choked up and we're looking at each other going, I worked with Dave for 30 years. This is what I've done my whole adult life. And that's why I was so glad that they're going to let us keep doing what we do, because I'm not at all ready to let this go. I love my people. I love helping solve problems. I'm so excited to spend more time doing it, but you nailed it. It was one of the things I think we both looked at each other and went, oh, wow. Okay, here goes the baby.
Yeah, it's true.
Yep, good. All right, yes, Judith, we would be happy to help with your kids anytime. Get investment going, that's absolutely part of what we'll do. We have junior advisors here as well as a brand new CFP. We all need to congratulate Melissa. She knocked it out of the park and got that done really, really quick. So we're continuing with what we've always told you. Our advisors will have CFPs. Trevor's working on his if you haven't had a chance to meet him. And they're both excellent advisors, but they're they don't have as much experience as 30 years. You can't. So they're really good at that, and they want to help anyone they can too.
Yeah.
Okay, Dave, are you concerned about political proposal to start taxing our portfolios even when we're not selling? The capital gain issue, yeah.
Yeah, it's absurd. I don't know what happens. Let's say you have 100% gain in something. They want to tax it 25% a year. I guess that until they tax away all the gain. It's absurd. It's not going to fly. I hope. There's a lot of these proposals that I am concerned about because people just have feelings about things instead of actually using data. Jennifer and I, we talk about it all the time. We've got some great partners in providing data about where energy really is. For example, you can wish all the EVs you want. It's just not practical. We can't do it yet. Not until technology lets us be there. We don't have the grid. We don't have this, but we're not allowed to have a discussion about it because now all of a sudden I'm not spouting data. I'm spouting politics. And I'm not spouting politics. I'm talking about real world. But what that does is yes, it can frustrate us, but it also makes it go, I'm not worried about owning Exxon or Chevron. They're not going away. You can't make them go away. They hold the cards. Now we can eventually say in some period of time down the road, they are going to go away or change or, whatever it is. But the point is that we can't ignore the data any more than when we're looking at companies that are in whatever space it might be. Let's call it healthcare. We want to look at the data. We want to look at those. in deciding how and what we're thinking about on the broad picture. And so, not my feelings. I may feel completely over here. It's not hard to do, I don't think, but it is, I think, for humans generally. I don't find this a difficult thing to do, but most people do. Don't tell me about X because I believe something completely different. Well, for example, if I made a comment about the border and that there's, according to the FBI, there's hundreds of terrorists that have crossed in the last few years and that we don't know where they are, that this might be a problem. The FBI told me that. But I just made some statement about being a right-wing nut that wants to protect the border. That is not what I said. I stated it was a statement of fact. This is one of the things that we try to carve through every single day, is to look just at the data. And I think it's so important for all of us to think that way, no matter what my core belief is. What is the data in front of us? And a lot of these policies are very, very anti-growth, and that is our concern. We want to see the United States become freer. We want to see that line I showed of the world living better, less people that are starving to death, for crying out loud. We just go, whoa, well, yeah, there aren't 1 million people in Somalia that died last year. Like that's a big deal. They didn't, and it's a big deal that they're living better. And I got to believe in the long run, with all the evil people out there, I get it, that in the long run, if people are living better, we're going to have a more peaceful world all the way around. Think about where women are from 50 years ago and 100 years ago, but only in the rich countries. That's where the change is, as we're thinking about half of our society. So that's why we look at data and we want growth. It's not just to get richer. It's because the world gets richer, the world gets freer, the world gets better. Yep. Sorry, I got on my horse a minute.
No, you did not. Does modern align politically with you? And he says, something I very much appreciate. And will you stay on Kevin Miller's radio program?
Okay. Well, I don't think, I think Kevin Miller is a go. They love the radio program, by the way. They may not all agree with my politics, and not all of you do on this call either. We know that, and we love the differences, honestly. We really do. But the answer is there are many in the company that align politically, and there's some that are actually in the leadership of the company that we know don't. So that's okay. I think it makes for not healthy debate because nobody's debating. It's fine. They just come from different sides, different perspectives. But we're not on a political organization. We're a data-driven financial organization, period. I do state my beliefs because it's fun to do on Kevin's program. But if people want to read into my investment advice as stating my beliefs, they're wrong. It's stating data. That's the way we think about investments always. We don't want to not do something or do something because of the political belief. We own BlackRock funds. We think they ran down the wrong road when they became overly woke. They also do now. They changed direction, but that didn't stop us from using great investments for you because we don't align with them politically. That's just not the way we think.
Yep. I think, unless there's another question I missed, and if there is, please raise your hand and tell me you missed me, because there were a lot coming in at once. So any other questions, anyone? All right.
All right.
We just want to reiterate too, and I'll just throw this in real quick and then I'll be quiet and let Dave sign up.
No.
We are really, really excited about this for you.
So I
Oops,
caught myself at the sake. So that
okay. And I think it's going to be something that you will notice. So please, if you have questions, concerns, call us and we'll talk it through and we'll reassure you that we're not going anywhere. We're committing to them for a long time. They're committing to us. So it's a really good partnership and we would definitely not let you join anyone that we didn't feel great about.
Yeah.
playing basketball and jammed my finger.
Okay.
Then,
Jennifer, I don't have anything to add, honestly. We are just simply delighted about this. It's been a long haul and we are not delighted about the process. I'll be honest. We have what is called deal fatigue. And it just goes on and on and on. Okay, that's what these guys do all the time. They're used to it. We aren't. This is something we just want to be done and moving on, learning technology. but the lift we're getting is going to be tremendous. And the lift for all of us is going to be tremendous. So we're excited. But we're here. If you have any questions, concerns, and I do know this, everybody hates change, even when it's good. But I promise, this is good. It's going to be okay.
And I don't think you'll even notice. Everything is going to be the same. Your income's going to come in the same. Everything will stand on your accounts as is. Honestly, I feel other than us being better for you, you won't notice a thing.
Yeah, good point. You're right. You're right.
All right.
Okay, with that, have a great rest of the day, and thanks for spending time with us.